Guys, I hope you're all well. All to my fellow traders, be it the market makers, we are all one big team. So, guys, as you know, I have been following the court report for quite some time now, weeks, if not even months, you know. So, I found something very, very interesting on the court report. You know, I always wanted to understand the court report and understand it on the chart, you know, understand the figures represented on the court report. How can I use that to my advantage to try and anticipate the direction of the market? Right. And I found a couple of things to be quite interesting, and my findings, which I'm going to share with you guys today, they are mind blowing by my standard. They are mind blowing. So let's get into it, guys. What is happening in the market? Wow. As you know, guys, my signature trade setup, this is it. 5200 EMA crossover, M pattern. There we go. Two hits. There's your M formation. And an enter. TP is expected to be at the blueberry. Standard, right? That's how I've always traded. It hasn't happened 100% of the time, as you can see here on this chart, right? It just reversed all the way back up again, even although it is a signature setup. All right. So, what happened? All right. How can this be explained? Believe it or not, guys, it can be explained. There is an explanation to it by looking at the court report. Right. So, these are my findings. These are my findings, guys. But before I get into the court report, I noticed something very, very interesting also on the court report, that the information on the report itself, in a way, it's lagging. What do I mean by that? What I mean is that the big banks, the financial institutions, have a head start, although they are forced by the trading commission, all right, the commodities and futures trading commission, that they have to disclose all of their open positions in the market, right? But they are given a freeway sometime. Let me explain by this, right? I want you guys to notice something very interesting here, right? Now, the court report is released every Tuesday, right? Just gonna open my calendar for you guys, right? Let's go back. Well, okay, it's fine. Let's use August, all right? It is released every Tuesday, all right? And when do we receive this information? We only receive this information on a Friday. So let's look at the most recent, right? The 16th of August, right? This information was released on the 16th of August. There's the report, right? We only received the report on Friday, which is the 19th, right? Now, bear in mind that the banks had the Monday, right? The big banks had the Monday to make the move. So that's one day. They submitted the report. That's 2 days. They know that there still has to be a Wednesday and a Thursday before it's actually released to the retail traders. And when it's released, it is released as released 3:30 American time. So by then, in South African time, it's quite late. It's around about 9 p.m. So I only get to view the court report on a Saturday to try and anticipate the moves that I'm going to make on the following week, which is Monday. All right. So basically, the banks have the whole week to make a move. All right. So on this Wednesday, right? Remember, they submitted a report, right? We have to wait for it until Friday. Already on Wednesday, they are already making their moves for the upcoming week, right? Which is the 23rd of August, right? So I noticed this, right? When I noticed this, I realized, man, these guys have got a weak head start over the retail traders. Yes, the court report information is very useful, all right, but we only see the move after it's been made, all right, whether you're like, oh, damn, they added the longs, I was short, or vice versa, you know. But then again, irrespective of all of this that I picked up, I, they, I also picked up another way on how to anticipate that as well, using the retail sentiments. The retail sentiment, right? Now, if you can go to my Forex book, A1 trading platform, right? Brokers actually share all of the open positions that are held by their traders. So now the good thing is that I know what the retail traders are doing, and they do not have a head start over the banks. The banks do, right? So this information over here, guys, it's extremely vital. I will show you how so in just a minute, right? Let me just quickly get it nice. This over here is a game changer. Added with the information over here, you'll be able to anticipate this move, right there. All right. Even although this is my signature setup, 5200 cross, there's the M. I'm expecting it to go down. Probably here's the impulse, pull back, shoot down, you know. That's my signature trade setup. That's what I was anticipating to happen when I saw this. Even on the, if you can just go on the 26th of July, all right, there was a signature setup on the 1 hour chart. All right, let's quickly go to the 1 hour chart just to show you what I mean. All right, let me just quickly clear that. On the 26th, there we go. There, all right. So on the 26th, I had a signature trade setup. There we go. 5200 cross, right? You're in short at that point. Take it down all the way, right? Even without even looking at the court report, I see a setup, right? I don't even need the court report. The court report just merely validated this move for me. Oh, all right. I was in line with the banks. All right. But now what happens is that all the retail traders, you see, this is the 26th of July, right? All the retail traders were shorting this market on the 26th. All the retail. How do I know that? Let's go to the court report. 26th of July, 26th of July, 26th of July, 64%. Majority of traders were shorting that market. So now this was probably 35.7. Actually should have been 36%. I didn't sort of rounded off that correctly. But bottom line is that 64% of the traders were in short on the 26th of July, right? So they caught that move. Well, I caught that move as well. And then what happens? On the 2nd of August, they switched the market. What happened to the retail sentiment on the 2nd of August? They jumped from a 64% short to a 60%, 68% long retail traders. Why? They were chasing this move. Then what happened on the 9th of August? I saw a signature set. There we go. On the H4 hourly chart, signature setup. Boom. I caught that short. Right? Caught that short. So now what are the retail traders doing on the 9th? Boom. They follow the market. They run down with it. Right? They run down with it. Now, I was part of the 69% who was short, thinking that the market was going to go test my target point at this 800 EMA, right? Or at least I was targeting this support structure for take profit. Probably as a lot of traders were probably thinking as well. But then what happened? The market reversed on everyone. Now it's going long. But then I want you to notice something. The retail traders, where are they? Haha, they are short. 73% short, right? Okay, that's what the retailers are doing. Now, what are the big banks are doing? Look at this, all right? They were taking profits on their long positions, right? From 105,000, 93,000, 77,000. What are they doing? They are booking profits on all of their long positions, right? And then what are they doing with the shorts? They are increasing the shorts, increasing the shorts, increasing the shorts, and cutting or closing their long positions. When they close long positions, for me, it tells me one thing: they are booking profits. These guys are booking profits, right? But note, the bias is still relatively bullish. But note, 71, 65, 60%. So some form of pullback is anticipated between the 26th to the 9th of August, bearing in mind that they've got that 1 week, 5 days head start with the retail world. Let's go back to my charts. Let's see what's happening from the 26th. 26th. What did you say? They were booking all of their profits from their longs, right? So on the 26th, they are booking longs and adding shorts, cutting longs, adding shorts. There we go. As a result, there we go. That is pretty much self-explanatory, right? So in that case, retail traders were chasing that short. As soon as it reversed, they chased the long. As soon as it reversed, they chased the shorts, all right? But it seems that on the 16th of August week, the market has them trapped in short positions. Where's the market moving currently? It's moving up. And around this blue area, which I've just drawn over here, which is a huge financial institution supply area, I anticipate this is where the banks are going to fill in their orders, right? They are going to reach this resistance area because there are a lot of orders around this point, right? Now, short holders are currently being suffocated because the market is reversing on them, right? The market is going against them. All the short sellers, the market is going against them. How do I know short sellers that they're suffocating? Because they are all short. Look at that, 73% short. They are feeling the brunt. So if you are short on USDJPY, you are feeling the heat. And you're probably going to feel the heat until the market reaches this banking supply area right over this resistance level, right? So how did I anticipate a reversal on my signature move, right? Now, guys, this is backtesting, right? I'm backtesting the COT report, not necessarily saying this is something I did do, right? Knowing myself and the kind of trader I am, this is something that I was likely that likely I would have done. Okay, so after catching, any market maker trader who understands signature setups would have picked this trade, right? They would have picked this short, right? Even more so on a H1 on a 1 hour chart. Let's just quickly go to that 1 hour chart. Right. They would have picked up this sell, right? Probably around this area. As soon as prices closed below the 800 EMA around this point, there we go. Let me just get that clearly. Around this area, short. Probably put the stop loss about there, depending on their risk management. I don't know. But they would have caught this move, right? They would have caught this move. All right. But now the issue comes where how would you have known that the market was going to go against our signature setup? That's the question. How would you have known it was going to do this, right? Now, there are a couple of clues, right? Your first clue, right? There's the huge impulse to the downside. Your anticipation is a huge impulse, a mini reversal, and a continuation, right? How would you have known that that wouldn't have worked out? Here's the first clue, right? Now, this is the power of the TDI, divergence. There we go. Clue number one, we've got a buy divergence building up. Well, that actually built up. So around this area, if you were in front of your charts, you would have closed whatever sell positions you have and look at a possible long position going up. That is the first clue, divergence. Right. Second clue, how would you have known that this sell on our signature setup is not going to hold? Is that on the 9th of August, right? 9th of August, let's go to our COT report, 9th of August, is that the majority of retail traders are short by 69%. 69% are relatively put it in this category over here, which is very strong. Which is very strong. So if retail traders are all, the majority of them, and probably the lot sizes as well are quite higher on the shorts than there are on the longs, that means the money for the banks are killing the short buyers. So immediately you see those two clues and you're like, whoa, let me pump the brakes a bit, close whatever sell trades I have, and reassess my position. That's likely, very likely what I would have seen. Because guys, remember, it's easy to see something that's already happened. It's very hard to see it as it's playing out in real trading time. All right. It's very hard. Okay. Also, going back to the COT report on the 9th of August, you're also seeing this. you're seeing this pattern. You're seeing that, guys, the banks are cutting their long positions. They are booking profits from 105 to 93 to 77,000. They're booking their profits. And at the same time, they're pumping short positions. So just by looking at this, I'm quite confident that, hey, my signature trade on the H4 platform, let's just quickly go to the H4 platform. All right, there we go. I'm quite confident this sub position is going to make its way all the way down. But then I saw the clues, which I just mentioned. All right. So irrespective of that, right, they released this data on the 9th of August, right? I only got to see it on Saturday. So if I were to count, which is 9, Tuesday, which is the 9th, Wednesday, Thursday, Friday. So it will only be released on the 12th. So that information will only be released on the 12th. When it's released on the 12th to us as retail traders, the banks have already made this move going into the coming Monday, which is the 15th of August. They've already made this move. All right. They already make this move. This move explains this push to the high. Right? Because why? The banks had a full 5 days head start to punish these guys. Right? And interestingly enough, when I got the court report today, which is the 20th of August, a majority of traders were already short, 73%. So during the week of the 15th, 16, 17, 18, right? Traders were really adding on the short positions. Why? Most likely it's because they saw this. And they were probably thinking, yep, this is it. This is the moment we've been waiting for. This is the true reversal pattern, which is textbook 101, right? This is what the textbooks teach us, right? Impulse to the short, pull back, and continuation. That for me explains, right, let me just get my razor quickly. That move explains this 73% in the current week that we're in. So even although you know how to analyze the court report, no one would have anticipated this. We didn't know that banks were going to double up on their long positions, just switch the market against the retailers. We didn't know. We have to look for clues, right? What's the first clue? It's this. There's the first clue, buddy. As soon as I say 69% short, I guarantee you the banks, the financial institutions, the markets are working against that. They want to book profits against these guys. They want to book profit against these guys, right? Interestingly enough, when I go to my TradingView platform, right? I use the free mode. I haven't decided as yet to go into it in detail, but at this rate, it looks like I will very soon, because I would like to have more than one chart on the same screen. Like this is the weekly, probably have the weekly, the daily, and the 4-hourly all on one screen. So something that I am considering to do very soon. All right, look at this market, bro. Guys, this market has been relatively bullish ever since it broke this trend line around 20 December 2020 going into 21. There's the breakout. You can see the reversal, and then it was just a huge continuation, breaking this high since 2015, yeah, since 2015, and then just continuing and just continuing. So I can see just by looking at this, the market has been overall bullish. How are they making their money in this market? By cutting longs, adding shorts, and then continuing with their uptrend. That's the only way I can see it. What do I mean by that? The very same thing that I was talking about on the market maker template for traders who trade price action, who trade patterns, breakout traders, swing traders, all of those guys, when they saw this move, there you can see the first point of reference, the second point of reference, and the breakout. Breakout, pull back, continuation, probably anticipating, no, it's going to break this support and then continue down. All right. Textbook 101. There's a breakout. Sellers were in. Pullback. There you can see all the candles, the doji, the hammer, all of these candlestick patterns and candlestick formations, that we've all been taught in the textbooks. There you can see right there, shooting star, doji, you name it. We were all taught once we see this, the market is going to reverse to the downside. And indeed, one candle convinced all of those traders, there we go, to go short. One candle, 4-hour candle, did all of that work. And then what happened? There's another clue. Probably still, but like I said, guys, it's very hard to see this as it plays out, because now it's easy for me to say, no, this was a clue. There we go. Resistance, then support, but in actual trading time, it's hard to actually see this as it plays out, in current trading time. So you only convince yourself, wow, this was a huge support. Had I just taken it long, because there's a support area. I'm telling you guys, it's difficult to see that in real trading time, because once you see this candle, this red candle shooting down, you're convinced that it's going to break up, because you know the structure. Pull back, impulse to the down, then reversal, then continuation, right? But for those who have an advantage and know how to analyze the COT data, look for clues on the chart that whatever bias they have won't hold. This is the key. I'm not necessarily saying always trade against the retail, no, because as you can see, retailers are very, how can I put it? They are very prickle. From 32% short, right? They can just change to 90% short, just like that, right? Just in the blink of a couple of days, that bias can change within a day, But if you understand how to analyze this change, right? This consistent decline in shorts, and when you get this information, how to apply it on the charts, you can save yourself a lot of trading heartache, right? You can save yourself a lot of trading heartache. So moving forward, what's my take from here, right? What's my take from here? Okay, let's just quickly go to the charts. Here's my take. I say this again, guys. Let's just quickly open the charts. There we go. This is my take. The market is going to reach this level. This is an institutional supply level for those who trade supply and demand, right? It will get there. What's happening now is that a lot of traders, right, are running away from their short trades and going in long. They are chasing the market now, right? They're chasing the market. I will not be surprised whatsoever if in next week's court report this changes. This will change to be probably in your 60s, and this will change to probably your 30s. Just make a note of that, right? And then what will the banks do once that happens? They are going to fill those orders. They are going to fill those orders around this area because open trading day on Monday, let's have a look. On Monday is the 22nd, right? The 22nd. A lot of traders are going to jump in long. And guess what? I'm one of those traders are going to jump in long, right? I'm going to jump in long because I know that's where the orders are. That's where the orders are. And the funny thing is, once that happens, what are you going to do? Right? They're going to buy. The market is going to show them probably a breakout, a false breakout, and then take it short again, killing the long buys at the same time. This is what I mean. They're going to take it through. There we go. Probably break out. Get whatever orders are above the supply, right? And then continue down. Get the retail traders now to chase the shorts and break up again. So I'm always looking at what the retailers are doing, right? What the retail guys are doing. At the same time, looking at what the big banks are doing. Now, bear in mind, guys, just quickly going back to this point. I don't know what these guys are going to do on the 23rd, right? I don't know. But what I can guarantee you is that I know what these guys are going to do within the next 5 days. Because how do I know that? I'm one of them, right? I'm one of them. So what these guys are going to do, the retail traders, is going to give me some form of indication what these guys are going to do. Because the whole game is for these guys is to screw over these guys. That's it. That's the game. That's the casino. These guys have got the dollars to convince these guys to take a certain direction in the market so that these guys will donate their dollars to these guys. It's an interesting game, you know? So that for me is trading in a nutshell. I'm just gonna watch what these guys are doing because these guys are prone to certain emotions: greed, fear, lack of patience, FOMO, you name them. They are susceptible to all of those emotions. These guys are not, right? So these guys make a move relative to what these guys do, right? So having an understanding of both ends of the stick, right, will help you time the market much better, because I can access this data any time of the week. Monday, Tuesday, Wednesday, Thursday, I see the sentiments. Is it changing? So come Monday, when I look at the latest retail sentiments, if this in any way drops, the shorts and the longs increase, retail longs increase by over 50 to 60%, that gives me a clear indication, okay, that these guys are going to go fill the orders on the 23rd of August. They're going to go fill the orders up here, right? How will I pick up that trade entry using the market maker? How will I pick that up? Same thing that I've always been doing. Go back to my 15-minute chart, right? And look for any buy setup. All right, sorry about that. Right? Go to my 15-minute chart. Let's go all the way. There we go. Quickly zoom that up for you guys. There we go. What am I looking for? I know that I need to take it up, right? Because now the short sellers are feeling the heat. I'm looking for anything that's going to bounce off the mail to take it up. That's it. That's all I'm waiting for on the 15-minute chart. That's my anticipation. So based on those key clues, right, I've set for myself a checklist box. I've ticked off everything on the COT report, right? I've ticked off everything, technically speaking, the chart. So it's just a matter of me to wait and see what my fellow retail traders are going to do come this week open. Yes, the market probably is going to reward those who are smart enough to not hold the shorts and move with the big banks and go long, because entirely they are net long. There you can see they are net long. They are net long, 61% now, net long, and 39% short. So these shorts for me are just reversals